I've completely evolved my thinking. I used to be so much more aggressive than I am now. I used to be in the camp of, I'm just going to rent my house so that there's no debt equity, and I'm going to deploy everything, and that cash flow is going to pay for my free house. And yeah, that sounds great, but when you lose custody of your funds are at risk. Now, I'm thinking more in terms of securing the bag first for my family. Like, I think you should pay off your house before you ever even think about investing in something.
Hey everyone, it's Tamara Thompson with Broadcaster Authority, and I'm super excited for our next guest who's local to Vegas. I'm going to have my co-host Graham introduce him.
Thank you, Tamara. So we got Justin here today. Justin spent the first decade of his career building Heartland Foods, which generated $87 million in gross revenue before being acquired by a private equity firm in early 2022. And now as Chief Capital Officer at Healthcare Integrated Technologies and Managing Partner at Kearns Capital, he specializes in raising capital, managing investor relations, and additionally, as VP of Sales at Kearns Marketing, Justin helps individuals and businesses build their brands on social media, monetize their influence, and drive revenue. As an experienced investor and hedge fund manager, Justin holds a diversified portfolio spanning multifamily and single-family real estate, as well as private equity investments. Justin, sounds like you do it all, man. So break it down. Where did this come from? What's a bit of your background and history, and how did you get into the investing space? And would love to hear about you selling a company in 2022.
Yeah, it's a very interesting journey. I will say the entire time we were building that first business, all I was studying was markets, investing. That's the world I always wanted to be in. I just had no track to get there, had no idea how to get into it, but I was obsessed with it. CNBC was the only thing I watched the whole time. So the whole time building that business, I knew I needed to develop skills. I needed to become the person that could eventually get into that space, even though I had no idea how I would do it. So I was just taking profits from the business and investing into deals as a limited partner to kind of learn the space on the way to eventually moving into it. So that's kind of how we ended up there.
Sounds like a hobby that morphed into a job, a vocation.
Yeah, because at first I thought it would always be a hobby and I would just manage my own money because I thought you had to go get a degree and then get an MBA and do all this stuff to get into the world. And then once I started networking in it and meeting billion-dollar fund managers that were college dropouts like me, it was the most empowering thing. So a lot of the limitations we put on ourselves are literally made up.
You're local to Vegas now, but you were originally, you said, outside of DC. What was kind of like that turning point that you went into this direction, really?
So yeah, I grew up in Maryland and went to college in Baltimore and then moved down to Northern Virginia. So I was in the DMV area in one way or another my whole life. And as I got older and, things happened, really the pandemic kind of left a sour taste in my mouth in the area. I just wanted to get out. And big cities, it just, you can't, the traffic to go to dinner, it's only 10 miles to get to DC from where I was, and it would take 2 hours. So you end up just kind of being a little bit of a hermit and not going out, not really doing much. So when I had the opportunity, when we exited that business, to relocate, I think that's just one of the hacks in life and that's what I did when I left Baltimore. It was time to get serious about my career. Had to leave that college world behind. So I think going to a new city is always a way to hack your way into forced innovation in your life. So that's what I did moving down to Virginia. And then I felt like when the business was wrapping up and we were about to exit, it was time to move on again. So I kind of did a nationwide tour. And it was going to be a zero tax state. It was either going to be Tennessee, Florida, Texas. And
said like a true investor.
Yeah, nothing checked the box like Vegas in terms of how tight the city is, how beautiful the mountains are. You can live in the mountains and be 15 minutes from the strip, but feel like you're in the wilderness in your day-to-day life. So to me, this is the best of both worlds being here in Vegas.
How did you decide what you were going to do post-acquisition? Like, was there any debate of like which path to take?
Yeah, because it came out of nowhere. The pandemic hits, your business skyrockets, private equity wants to buy you. So it was a total identity crisis of, I got to figure this out. I've done one thing my whole life. I didn't know if I could even do anything else. So there's a lot of imposter syndrome there, but I just went out networking, went to tons of events, masterminds, paying for the highest level ticket, spending money I couldn't really make sense of at the time for proximity to people that had done the things that I wanted to do. And that's where all the doors kind of opened up. I met some guys that were launching a hedge fund. They were leaving a marketing business. It was kind of perfect timing. We were both going into the world, and they had some key relationships that I didn't have that we'd be able to leverage billion-dollar institutions in our first fund. So if you don't have a track record,
right,
if you can go fund to fund with somebody who's got a 20-year track record and billions of dollars, it's a great place to launch. So I was like, this is it. I was the first investor in that fund. I kind of had to get those guys to let me in, and I actually went out raising capital for them without them asking nothing, and provided referrals to them. And after a month of doing that, they were like, hey, do you want to come in on this? And
wow,
that's how I got my launch.
Right. So you're piggybacking on someone else's credibility.
It's so interesting too that you really were preparing for that for years with your self-study, with your organic interest, not knowing where it would end up. I'd like to know about that first chunk of money you got, and now you're going to put it in some type of an investment vehicle, and you're new, right? And I'm smelling like chum, like right? How do you were you fearful of getting ripped off? How did you know what to do with that money, and how'd that work out? Did you do well right out of the gate?
Yeah, I think the 10 years of figuring out what didn't work, I figured out I'm not a trader, tried all that stuff.
Yeah.
Managing stocks myself, moving very slowly. But I think it was more of the investor mindset because what typically happens is, the first time you can save $5,000 in your life, you want to go be an investor. And then, if you put like $500 into something, you're watching it all day, you've completely shrunk your mindset in terms of what money actually is. If you have people ask me all the time, like if you have 5, 10, 15, 20 grand to invest, what should I put it in? I'm like, yourself, like go get better so that you can
definitely
earn more to actually be a real investor. So understanding what an accredited investor is versus, everybody else, that was the first goal, was how do I get accredited? So that was my goal the whole time I was doing door-to-door sales, was just to become accredited by the SEC's definition so I could even be qualified to go make those private placement investments. So when we exited and I had all that capital, I knew exactly what I wanted to do with it. I wanted to put it in long, slow, multifamily, stable assets. And what's hilarious about that is we exited at the peak of that euphoria, which was also the peak of real estate before interest rates went crazy. So a lot of what I thought was the safest stuff ended up being not so safe, which is just kind of a hilarious paradox of just how investing goes. So I think if I would do anything differently, I would hold on to more cash than I did and be more patient. But I think you've got to go through that. And if you're scared to lose money, you just probably shouldn't enter the world. I've lost a ton of money learning what doesn't work. And I think there's a lot of value to that.
So let's talk a bit about what does work. Like for me, my brother and I own a portfolio company, and we've got a couple of companies now that we're trying to figure out what do we do with our cash reserves? How much cash do you need to keep on hand as a company? What's that right formula? And then what do you do with the excess cash? How do you invest it well? Is that something that you do in advising companies on how to do that? What would you say to, a company that's 4 years old and in a position where it's now trying to figure out how do we build sustainability and a really solid foundation for the future?
Yeah, it's a great question. I'm not too deep on the acquisition side of what we do, more the investor relations, but just from being in businesses, I would say just understanding your burn rate, your numbers, and being very disciplined in terms of, cost per employee or revenue per employee, like all these different metrics, operating from whatever your favorite is, traction, EOS, whatever, but having a framework where you can forecast and predict so that, you're not getting blindsided in your business. I've seen a lot of people, get the payroll up way more than it should be, hoping for revenue, and then the business collapsing. So staying disciplined to, the metrics that you can go read any business book, I think, just like you can read any investing book, but it's the discipline to stick to those principles that are the difference of who's going to win. And, every time you're winning, just remember the next recession's coming, the next innovation for us in the food business, it was always the lead generation. Facebook ads were really cheap, 2015 to 2018. All of a sudden we couldn't make them pencil. We had to figure out a different way to get our lead flow. So it's always going to evolve. And just knowing that, I would just say, whatever you're comfortable with, is it 3 months of cash? Is it 6? Is it 3 years? Understand your risk tolerance as an investor or a business owner. Yeah.
So speaking about risk, how do you think about protecting downside? You talked about wanting long-term assets that are really safe and secure versus that kind of asymmetric upside and chasing that. How do you balance that out within a portfolio? What's that kind of, mindset that you have, or do you have a philosophy around that personally?
Now for investing, I'm looking for a competitive advantage. At the end of the day, it's like people that wholesale houses. I guess that's the best example of, you got a $400,000 house. If you can get it under contract at 300 and then sell it to a flipper at 350, that's the arbitrage, right? So I think buying things on sale doesn't really matter what the asset class is, but the money's usually made on the buy. So understanding that is a big principle as well.
So buying depressed assets, understanding the markets well enough to know that, hey, this asset is on sale right now, and being confident that it's going to go up over time.
Right. And competitive advantage. So on the big side of late stage private equity, it's okay. Somebody puts $1 billion in at, let's say, $14 a share. I'm giving you a real scenario if this happened.
Yeah.
And we were able to get the shares of the same company at $7 off of a fund that was in distress. That's a competitive advantage. We got the shares 50% off, right? So we're locking in that upside from day one, and then wherever the company goes onto IPO from there. So buying things at market value is just, I don't think that's a good strategy.
Yeah.
What do you decide what to invest in? Because it sounds like you don't necessarily discriminate against different like assets. What is it? Do you tend to have go-tos of like investment, whatever you tend to invest in?
It depends on the fund. They're all going to have different, let's say, purposes to them. Whether it's a customized fund, you can buy all kinds of stuff, but usually it's going to be an SPV that goes into one thing, or it's a debt fund. But it doesn't matter what the structure is, but for me, it's the competitive advantage of who my partners are and who I can find that's the best in that space. Because I know what I'm not good at, right? So I'm not going to be the guy who's negotiating the deal to buy $100 million of SpaceX, but we'll partner with the guys who do and can get it at a great value and get us access, so then I can go give access to retail investors that will never have a shot at the cap table of SpaceX, right? So that's kind of the way I look at it, is who can I partner with? Like my newest partner, Scott Boroff at Healthcare Integrated Technologies, he's got 22 exits. He's done over $1 billion on Wall Street. Why would I, 2-3 years into this world, try and go do it myself when I could partner with him? So
you said you're really strong with the relationship side, with the investor side. How do you come across these individuals? Through like specific networks, certain things, certain Rolodexes of people going to events? How do you find these individuals?
The first time I raised capital was all through my brand on social media.
That's incredible.
Right. So I started building it while I was doing the organic food stuff. And this is just for anybody who's debating on building a personal brand, like start yesterday. You don't need a plan for your brand. You are the brand. It's going to evolve with you, with whatever you do in your life. So when we sold the food company, I just changed all of my content to money, investing, changed the bio, changed everything, and then started DM outreach to all the podcasts in money. It didn't matter if it was crypto, whatever, real estate. I just knew wherever wealthy people's eyeballs were, I wanted to be there. And by going on those shows and just relentlessly, pursuing that stuff, the inbound leads started flying into my Instagram. You move them to Zoom. Here are our offerings. Are you accredited? As long as you check that box,
It's incredible how podcasts can reach so many people at this point and bring in leads and connections and relationships. So that's really cool that you did that. So leveraging podcasting, obviously, and we're on a podcast today.
Right. And then from there, it's okay. What else do you do? Do you have in-person events? Can I speak on your stage? And then, that ball keeps rolling down. So at the end of the day, whether it's through podcast, DM outreach, in-person live events, it's all about meeting people. And your relationships with other people.
You said you went to attend a lot of masterminds and things like that. I'm assuming that you currently are in masterminds, either attend or a part of some yourself for your own, higher good. And
just getting into any room that I can, and the rooms keep getting bigger and more exclusive. By this person invites me to this one, and then a couple weeks ago we're at Jetson Capital on the tarmac here, and it's a $200 billion net worth in the room, and it's don't even feel like I deserve to be in the room, And then there's someone there you meet that invites me down to Gary Cardone's house for a ridiculous mastermind that was on the beach at his gigantic house. So, and then you're just kind of looking around. It's like, how did I end up here?
Yeah. Talk to me a little bit about that. I think pivoting your content and your personal brand from the food space into the investing space, DMing everybody, cold outreach to accounts that you're connected with that are in the investing space and getting on podcasts. How does that imposter syndrome kind of factor work for you? I mean, that I think is something you kind of already mentioned, feeling like you didn't really belong there. How did I get here? Like just even the mindset side of things. Talk to me a bit about that.
Yeah, I don't know if most people just don't want to admit it or if I'm the only one, but I have that at every level of everything I've ever done in my life. It never goes away. I just, for whatever reason, do it anyway. So just run towards the fear. That's it, right? I mean, from the first time I went to knock on a door, shaking, I couldn't even get out of the car, to asking for a $300 deposit, like $300, right? Then you get comfortable with asking for $5,000. Then at every break point when that feeling comes in, you just identify it and say, you have a choice of how you want to talk to yourself in that situation. Is this fear? Is it anxiety? Or is it a sign of growth? Am I moving in the right direction? Run towards that feeling. So if you can control your brain, and I did a lot of reading to understand why my brain works like this, right? Because I think all of ours do, but I just had to understand it to work through it. And it doesn't go away. You just understand how to just keep going.
What's the self-talk like when you're in that moment? You're at the Grant Cardone mastermind and you're like, what is the self-talk like while you're talking to someone that maybe you haven't kind of connected with in the past? Like, how are you actively talking to yourself in that moment?
Yeah, it's
are you like, let me take a big breath. Let me like just focus on that person I'm talking to. Like, how do you, like, what is the actual thing you do?
Yeah, it's, now I don't have it as much because the biggest one that happened the other day, I get on a Zoom. I have no idea. This guy just raised $6 billion for a fund. He's taken a public company private, and I'm sitting on Zoom with this guy. And you just start to understand that like everybody's the same. They're just people that are just further along in the journey that just thought bigger. But I think you have to get into these rooms to understand that nobody ahead of you in the food chain is going to hate on you. They're going to be the nicest people, and everything that you're fearing is just internal. So
I think when you step into these larger rooms, like you said, everyone's just human and they're just individuals. And a lot of people that have gone through the experiences of where you'd like to go and surrounding yourself with these people, they're very humble in that whole journey, and they like to help. They want to see other people succeed. And I think that's what's incredible about this space is a lot of people think like they're not worthy to be in a room, but you're definitely worthy because you get these mentors from that space and then pure connections from that open up major doors for business opportunities. So it's an incredible way to grow.
It becomes very strategic though, because at that level, it's who can manage the relationships correctly. So the self-awareness to know where you are in the food chain is very important when you're dealing with anyone really, right? People who don't respect someone's time ahead of them in the food chain, or they ask for things instead of bringing value first. Like these are the little nuances that get you invited back to the room.
Right. Exactly. Yeah.
So I'm just curious too. A hedge fund manager. So I'm a fiscal idiot. And I'm thinking hedge fund is, so I picture you like, I've got $100, I'm going to give it to you, and you're going to put it together with a lot of money and make investments. And then there'll be a dividend coming back to the people that gave you that money. Am I close? Is that what you do?
Yeah. So there's different names for all these different types of funds that make it sound all sexy and complicated. But, private equity funds buying businesses, a hedge fund is trading equities or stocks, whatever you want to call it, fancy words for different ways of making a private placement investment. That's all it really is. It's just the difference of private investments and public.
So then you can take other people's money and invest it, and you do a good job with that. Everybody makes money. Well, you're a bold guy. You learned hard through your own study. And as you mentioned, not afraid to lose some money. How about your clients? You have people calling you up all the time and say, hey, the market went down. What's going on? Is that a tough part for people that aren't as developed as you are?
Yeah, especially when you're not winning, right? Or something goes wrong, like which happens, That's probably what's built the thickest skin for me is going through the first investment loss when I had taken other people's money.
Right.
And that's where you find out who you are. You look in the mirror and say, well, we could just send everybody a K1 for the losses, close the fund up and start another one, rinse and repeat. Like that's how this world works. People are ruthless. That's not how we operate. We're going to dig our heels in. We're going to fight for our investors. We're going to try and get their money back because there's something called a high watermark, right? And in a hedge fund, the general partners only make money above that high watermark. So we have to make more and more to take our piece. So if we have a big loss and we can't see the recovery, you're basically working for free until you get back to that high watermark.
High watermark, yeah.
Yeah, so there's a lot of integrity there. So I would say the most important thing for me, if I'm going to invest with somebody, is, okay, general partners, how much money did you put in the deal, right? I need to know you're going to protect this fund like it's your own. So I've had my own money in every fund that we've had, and same with all of my partners.
Yeah, I can feel the energy when you talk about other people's money at risk. That's got to be psychologically harder almost than losing some of your own cash.
It is, yeah. It's horrifically stressful at first.
Wow.
And then you go through it, and then you realize, okay, these are big boy decisions. Like someone else's decision is not my responsibility. Protecting the investment and doing my part is, but we're taking this risk together, especially in a 506c accredited investor only situation, that's the riskiest investment you can make. So like everybody wants to be your friend when, you're winning on the upside of the aggregate, but sometimes it goes the other way. There's a lot of risk involved.
And therein lies the integrity feature, that people have to have peace of mind knowing I invested in good faith. They worked in good faith. There's no guaranteed, you want a guaranteed outcome, buy a bond, right?
Yeah, which has been a terrible investment the past couple of years, right? So like bonds are safe until they're not, right? Real estate's safe until it isn't. I think that comes back to just the diversification and the discipline of the investor. Something I say to people now that I didn't in the beginning. So it's like, if you need this money in a certain timeline, what is it that you could potentially need it? Because it's going to be locked, right? I've walked them through all the scenarios of lock period just to make sure that I covered all my bases, that I can protect them, even though it's their job to protect themselves. And that's another thing why we put third-party reporting in place. That is extremely important, that the average accredited investor has no idea what that even means. Most fraud takes place because the general partners get into a squeeze and they try to save the deal or whatever. They commit wire fraud, moving money from where they shouldn't. That can't happen if you have third-party reporting in place. So I just think that's the number one thing. If you're going into private placement, just make sure that the people you're operating with have third-party reporting.
And that's not a requirement. That's something some folks have and some don't.
Correct. And what it does, it means that your statements are going to come from a third party, right? Like Bernie Madoff faked his statements, right? Like all the Ponzi schemes are like,
but the statements look great.
Yeah. Right. So you do that, and you can't move money unless the fund banking, the general partners, and the third party administrator all sign off. So the money is always locked. So even if the general partners wanted to steal or do something, shady, you can't do it with third party.
So I've never heard that term before. That seems super important. Can you just say it again, please?
Third party reporting?
Third party reporting. If I ever do anything, I'm going to remember that. Thanks.
Yep. That and making sure that the general partners have skin in the game and are invested in the fund as well. Justin, maybe what's the biggest surprise that you've learned, or the biggest, most surprising lesson that you've learned as you've made the transition into investing at the level that you have?
Wow, there's a bunch, and anytime you're new in something, you're going to learn a lot. What I learned is the people that I respect have bigger losses than me. I had a hard time dealing with my first investment losses. It feels crippling. It's really just ego. You're like, now I'm the guy that lost, But then it's like Bill Ackman lost $4 billion. Ray Dalio, the greatest hedge fund manager of all time, went bankrupt on his first fund.
Yeah.
So, I think it's just the resilience of being able to internalize it, work through it, handle it, and realize it's just part of the process and keep going.
What's been the most rewarding experience going through this as well?
The people. Nothing against my first career, but, in-home sales, doing the same presentation every day, it gets redundant. You get into this world, it's very high-level people with incredible stories. The conversations are stimulating. So your day-to-day is a lot more enjoyable and not just a mundane, repetitive process of the same thing over and over.
And in your line of work, as you ascend with your status, reputation, and business, is the threshold of investing go up? Like I took $300 once upon a time. Now you want to play the game with me, you've got to trust me at a higher level of initial investment.
Yes, and that's more on the raising side of things. For me, as my role in these funds is, as the deals get bigger, the access gets better, the check sizes go up too. So you have these different zones of raising capital. Almost all the money I've raised has been from retail investors, people that made money or have money from their profession, but investing is not necessarily their expertise. So that accredited investor retail level, you're getting checks from 100,000, anywhere from a couple million usually. From there, if you want to go to the next level, you're going to family office, and then institutional capital from there, where check sizes are 25 million and up. Like, they won't even look at a deal unless they're writing a $50 million check. Some of these firms that were managing multi-billions of dollars. So it's a very different thing when you're going to a family office to raise capital or an institution, right? Because now you're dealing with somebody who's better at this game than you.
What advice would you give me if I was wanting to make the transition from entrepreneur to investor? As just kind of getting started, 3 years behind you, based on what you've learned to date, what would be a couple pieces of advice you'd give me if I was jumping into that world?
To deploy, are you saying to deploy as a limited partner?
Yeah, like say I'm continuing to operate my businesses. I've got 3,
Yep.
4, 500,000 in excess capital every year that I'm trying to figure out what to do with. I want to become an accredited investor and start getting into these types of investments. What would that look like? What kind of advice would you give me?
Look at 10 times more deals than you think to pick the ones you're going to go into. But here's the thing, when you're new to the world, access to the deals, like that's the hardest part. So in the beginning, when I was looking for limited partner investments in that situation, I was looking on social media, like who are the real estate syndicators, who's creating content. And then I started reaching out to all those people, started looking at deals and starting to understand what's important to me. And that's not always the return. It could be the return of capital timeline. It could be something, depreciation for my taxes. So I think you got to look at the intention of why you're investing in something, how long the money is going to be away from you, and really figure out what's the best deal for you, and then research the track records of these operators. And even still, I mean, it's hilarious. Like one of the best operators I chose for one of my real estate deals ended up committing fraud. And it's like, guy's done billions, So I think that's another thing is just understand no matter how much due diligence you do, no matter how many SEC attorneys and liquidity providers, like all this vetting that takes place, there is still risk.
Still the human element.
Yeah.
Mm-hmm.
Well, I love what you said about investing in yourself first. I think it's very compelling. And the idea of investing, I'm going to gather it's the individual that has money that they can afford to lose, because you don't want to be in a position as an investor. I'm sort of thinking through it with you as you're talking. I've got $500,000. If that's my stake in life and it goes away and I'm crushed, that's a bad path.
100%.
Yeah.
I've completely evolved my thinking. I used to be so much more aggressive than I am now.
Yeah.
I used to be in the camp of, I'm just going to rent my house so that there's no debt equity and I'm going to deploy everything and that cash flow is going to pay for my free house. And that sounds great. But when you lose custody of your funds are at risk. Now I'm thinking more in terms of securing the bag first for my family. Like I think you should pay off your house before you ever even think about investing in something. Right.
Interesting.
Yeah.
Because if something does go wrong, at least you don't have to worry about paying your mortgage. And if you need to tap into home equity and go backwards a little bit, you can just do.
You can do that.
But if you throw it all out into deals and they all go wrong, or maybe they're not going wrong, but let's say you lose your active income and you don't have liquidity because it's locked up in a 5 to 10 year syndication apartment complex. Now you're going to be a cash poor millionaire and feel really broke. And no money.
I could talk about this stuff for hours. I'm grateful that you came out today to the studio. Thank you, Justin, for joining us. For those that are watching the show today, where can they find you, connect with you, follow you on social media, learn more about how they could potentially work with you as well?
Yeah, I'm easy to find on social media. There's only one of me with this crazy last name. So it's at Justin Freishtat, Freishtat. Yeah, reach out to me on any social media. That's the easiest way to connect.
Awesome. Thanks so much, Justin, for joining us today. Those of you watching, be sure to follow Justin everywhere. We'll have the links in the descriptions. Of course, subscribe to Broadcast Your Authority. Leave us a review on Apple or Spotify or anywhere that you download your audio podcasts, and we'll see you in the next episode.